Kicking off with IPH, we certainly don't expect any surprises at the result. The company have put out a couple of presentations in the second half of 18 and haven't provided any earnings commentary, so we suspect that they're pretty comfortable with consensus expectations. We sit in line with those at around EBITDA of about 73 million, and we expect a final dividend of 22.5 cents. Looking at the result, I think investors will be keen to hear an update on the AJ Park acquisition and what the IPH management have been able to do so far in that business in terms of growing the margins and also transitioning clients into the Spruson & Ferguson Asian business. China is a big growth area for this business. I certainly think that'll be a key focus area for the group going forward. And what we saw in the second half as well were Australian domestic filings stabilised. So it looks like we've finally seen the back of the America Invents Act, which will be good news for investors and certainly well received. The data and analytics business, this business kind of was a startup which has been losing money. We suspect that there's scope that business is shut down. We don't suspect that that'll happen at the result, but may happen at the AGM. And then just following the recent strong share price performance, the stock is trading on about 15.5 times 19 PE, and we still see a bit of upside there and retain an ad rating on the name. So just moving on to People Infrastructure, another one that's well held around the network. We floated this company in late November last year, and obviously the share price has been on a good roll. There's certainly strong industry tailwinds across multiple sectors for this business. The NDIS rollout, which has been a bit slower than anticipated, will be key for investors at the result. But the company have certainly been looking at acquisitions. They made one during the year, and we'd expect more to come going forward as well. And they that should help drive earnings for the group going forward, and also improve the cost leverage as well as these additional resources or staffing are put across the existing corporate client base. The stock's trading on a EV/EBITDA of about 7.4 times 19, which compares to the IPO, which was about 6.9 times from memory, and its closest peer, which is Kiwi-listed AWF Madison, which trades on an FY18 multiple of 7.9 times. So we still see upside in this name. A good solid first result, I think, should be well received by the market and should instill increased investor confidence. And then just lastly, of the companies that are reporting this period, Jumbo Interactive. We recently moved Jumbo back to an ad after the share price fell on the back of Tabcorp kind of exercising the options and then reducing its position on the back of that. We think that's created a really good buying opportunity for investors. The company does have guidance in the market for FY18. Given their general conservatism, we do sit slightly ahead of that. So there won't be any surprises expected at the result. I think for investors, you need to obviously look at 19 and what we've seen so far. In July, we had 8 jackpots at or above $15 million, which compares to only 4 in the PCP. There's also been 2 huge jackpots so far in August. We had a $70 million jackpot on Tuesday, and there's an $80 million Powerball tonight. So this bodes incredibly well for their 19 numbers. Remember as well, any new customers that they have got on the back of these jackpots, they'll be able to leverage for the next, for the remainder of the financial year as well. So company's got surplus cash to their operating requirements. They have paid special dividends previously. We expect the trend to continue, even with the high payout ratio that they're operating with. And given it's trading on about a 18.7 times PE with, strong double-digit earnings growth and probably upside to our numbers based on the start that we've seen to 19, we retain an ad rating.